Welcome back to the market right here on ET Now, and let me welcome Ashish Chaturmohta on the show right now. Ashish, hi, morning, and good to be speaking with you. And Ashish, a lot of these sectors that are in focus on the back of the big GST bazooka that we have seen, from autos to FMCG and lots more. But specifically, Ashish, what's your take coming in on NBFCs? Because just yesterday, Bajaj Twins were making good moves all throughout the day. They were in the list of top gainers. But other than Bajaj Twins, any other stock within the NBFC basket that looks good to you right now?
Hi, good morning. So I think, as far as NBFCs are concerned, we are witnessing some kind of, pressure considering the kind of compression which we are seeing on the NIMs. And I think this is going to continue. In fact, today there's a report which is suggesting that the entire banking credit, which was expected to be in the range of 12 to 13%, this now is going to be around 10%. So there's a certain amount of pressure on the credit growth environment, and obviously because of rising yields, we are witnessing some compression on the NIMs. So this is also going to impact to some extent a lot of NBFCs. Bajaj Twins, obviously the market leader, obviously, because the reason is there's a lot of focus on consumption due to the GST cut, and obviously Bajaj Twins is a good proxy to play the entire consumption story because 60% of the consumer financing is being done by Bajaj Finance, and that's the reason I think these two companies would be the biggest beneficiary of the recent rate cut. So we would like to continue to remain positive on both these names, Bajaj Finance and Bajaj Finserv. But apart from that, we would be very, very cautious, at least from the NBFC perspective, in other segments.
Okay, so that's the take coming in on the Bajaj Twins and the overall sector that they are operating in. Ashish, also give us your sense on some of the sectors that have been doing well on a week-to-day basis, and you have a nifty metal. So a lot of these names from the metal pack have been doing well. Any take on the sector overall?
So there's a lot of discussion going around China cutting its production, and obviously if it happens, then it is going to support the domestic steel prices. And with a lot of growth expected on the manufacturing side, we believe that if steel prices remain stable, then the demand is reasonably good, and which will ultimately increase the spreads for a lot of these steel players. So I think yes, definitely JSW Steel, Jindal Steel in the large cap names looks very promising, but in the mid and small cap we like stocks like Lloyd Metals because of its own iron ore mining reserves, and with the recent clearances from forest and environment side, I think the overall capacity is going to go up significantly from where we are today in terms of production for Lloyd Metals, and that's the reason I think it could be a good play to ride this entire rally in the metal basket. And we believe that stock has also seen some correction in the last 2-3 months, so it is offering a good risk reward at current levels. Even players like Hindalco are going to be big beneficiary of a mega trend which is kind of witnessing in the metal because of China's production cut, and obviously because dollar index is also correcting, so we are seeing some amount of rally happening into entire commodity cycle. So Hindalco, a good proxy to play the entire aluminum story, and I think that would be our preferred bet within the metal basket.
Rahul, as a house, anything that you recommend buy on? What are your top buys, for instance?
I think 2-3 things which we already discussed. One is financials. I think second is auto, which is going to be a direct beneficiaries, and especially if you look at passenger vehicle companies, I think these are the direct buys. So and third is the quick commerce, whatever we discussed, I think. So I think HDFC Bank top bets from financials, and from auto, Maruti and Hyundai both are going to get benefited. And domestic play for two-wheelers, I think with Hero Motor were 95% of this domestic play. So that will help them. And obviously quick commerce space, I think we have been seeing that new round of momentum getting built up in the entire space. It's not only Swiggy and Eternal, but if you look at ideas like delivery, which has also done well, PB Fintech, and so on and on. So I think these are the top ideas what we've been liking at this time.
Good to hear that. Rahul, always good to have you on the show. We'll let you go
My
on
pleasure.
that note. Thanks. Okay, let's just revisit what the pre-open, or rather what the GIFT Nifty is right now indicating and what the implied open is. Seems like we're headed in for yet another quiet start. Kunal, the other big move that one has seen, and I don't know if you've already discussed these stocks, autos. And we've often talked about M&M's leadership, and that I think got sort of resounded once again. 6% of a move on M&M. Where else do you think M&M will go from here? And more importantly, is there any other stock within autos which is showing this kind of leadership signs?
It's a very interesting question, Aisha, because this comes at a point where I've looked at the charts for the auto index extensively over the last few years. 2023 mid somewhere, I think March, April somewhere, is where there was a big breakout which happened on the Nifty Auto Index, and I think from there was almost like a 50 to 60% jump in the auto index over the next 1 to 1.5 odd year. Something very similar on the charts where you've seen the RSIs breaking out of their major resistance points, the indicators on the weekly charts for the auto index has come back into a similar kind of a breakout. And that's exactly the reason why you're seeing many of the auto stocks one by one showing signs of a breakout. It started off with, Eicher Motors and Maruti first showing signs of a lifetime breakout above their previous major highs, then a strong comeback from the likes of Hero MotoCorp from 4,000, 4,200 levels, Bajaj Auto from sub 8,000 mark. And now I think M&M, which of course was a very strong performer as it is from the last 3 to 4 years, that stock after yesterday's gap up also indicates that it's trying to come back into a catching up phase with many of the other auto stocks, which over the short term have moved up higher. This generally happens when there is a very strong and a ferocious uptrend, which could be in play for many of these auto stocks. I strongly believe that potentially over the next 12 to 18 months, you could expect many of these auto stocks to make a very strong, further up move, momentum up move, or a, further scale up from current levels. I think it's more like a buy on dips strategy, which should be there for traders who have a time frame of 12 to 18 months for many of these, sectors or many of these stocks within the sector. I also believe that the likes of Hero MotoCorp and Bajaj Auto could be very strong performers going forward because of the way the stocks have been huge underperformers and at the brunt of selling from 2024. So bullish on auto stocks, especially the larger cap names over here.
Okay, so that's the take coming in on auto. But Kunal, want your take on Varun Beverages in particular. We've heard that GST of 40% on aerated beverages, sugary drinks, and Varun Beverages was a stock that wasn't doing very well yesterday. Apart from the fundamental headwind that has come now from the GST Council, on the charts, how is Varun Beverages shaping up?
Yeah, I think so over the short term, 520, 530 was a zone where the stock took a resistance just last week. I think it made a high of 524, 525 thereabouts. And from there, the stock started to go into a correction. This comes at a point where many of these other, peer group stocks, they were showing signs of a breakout for themselves. I would believe that, a reaction of 2.5% on the downside, and that too after such a kind of a severe negative news flow for the stock price, would still be considered to be a more of a muted price action for the stock. The good part is that the stock is still trading above the key short-term moving averages, especially the 20 DMA. And that, I believe, could be a critical point of support for Varun Beverages. So I would look at the stock just about trying to amble into a trading range. 525 thereabouts could be a resistance for the stock in the near term. But I think on the downside, 470, 475 could be a good zone where traders could look at a contra buy on the stock.
Ashish, just wanted to get your own sense on how you're looking at the entire Realty as well as the beneficiary piece. I mean, GST on cement gets reduced. Other than that, a lot of other building materials as well, wherein the rate reduction has been seen. And of course, you are going to feel the impact on real estate, hospitality, and so on and so forth sectors as well. But purely in terms of investment, what is it that you're liking from this entire basket?
So actually, as far as the real estate sector is concerned, we are a little cautious at this juncture. The reason is, we have seen massive uptick in terms of demand in the last couple of years, but now we are seeing the inventory building up for a lot of these players, and we expect there can be some kind of slowdown in terms of the overall demand. So as far as the sectors are concerned, we are very positive on the entire hospitality as a sector. The reason is there's a good mix of owned, plus there is a lot of management contract which is taking place, which is making the businesses more resilient in the context, and the overall capex requirement is also coming down. So and we believe the kind of average room rates which are going up, plus the occupancy ratios are also increasing. This is supporting the overall environment for a lot of this hospitality sector. Let's take an example of a company like Lemon Tree. It is going to increase the overall capacity by 2028. So in the next 3 years, we are going to see the capacity doubling. And because most of its hotel keys are below 7,500 rupee average room rate, so which is basically where the GST benefit is the highest. So I think keeping that in mind, I think stocks like Lemon Tree could be the biggest beneficiary of what is happening on the hospitality sector. Apart from that, even the mid cap, small cap, hospital stocks like Chalet Hotel or Royal Orchid all could be the big beneficiary of the trend which is happening in the hospitality as a sector. Apart from that, we are very positive on the entire consumption theme, and we are playing this consumption theme through new age companies like Nykaa, Delivery, Eternal, Swiggy. So I think a lot of these companies are moving to the path of profitability, and that's where investor interest is aligning. So there's a lot of buying interest in these names as well.
Okay, so looking good for some of these names. I'll get a technical chart check from you, Kunal, in just a bit on Nykaa, because look at the stock move in the last 6 months. But Ashish, before that, the point that we were making about cement and the whole GST angle to it. But even if you talk about how cement prices have been trending, demand has been subdued. Of course, it's the monsoon season, but prices have remained rather steady. Now that this GST cut has come into play, what could this mean for cement prices going ahead?
So, see, I think there are companies with this, the entire sector is going into a phase of consolidation where the larger players are acquiring the smaller capacities, and that's where I think a lot of pricing power will come, and there will be cost efficiency to a lot of these players. And that's the reason, if you want to play the entire cement team, it would be through names like UltraTech Cement, or in the white cement, I think JK Cement would be a very good play to ride this trend. So these will be two picks from our side, which looks very interesting to play to the rally in the cement basket. But I think where we are avoiding is the regional players or the smaller players, because first of all, the cost efficiency won't come into it, and obviously the pricing is going to be subdued. So overall, the profitability dent is going to be high for a lot of these regional players.
Right, okay, that's the take coming in some of the cement plays. Just want to look at the market structure from yesterday. While of course it was the insurance plays which were weighing heavy, but look at a Tata Consumer as well, for instance. I mean, to think of it, you would have thought that some of the staples names would actually move up, as was the case with Britannia and the rest of the pack. Not so much for Tata Consumer. And yes, banks, Maruti, Infosys, so